Hello and welcome to PQ Prime. A very good afternoon to all the viewers. One stock that is in focus is a Bajaj Auto. Profits have risen by 42%. And overall, when you look at brokerage reports as well, clearly indicating that yes, there is a gradual export recovery that is in store and which is a true positive when the company that we're talking to. Joining us on the show to discuss more is Rakesh Sharma. Rakesh, good morning. Good afternoon and welcome to the show.
Good afternoon, Hiral. Nice of you to have me on your show.
It's always a pleasure to speak to you. Rakesh, overall strong performance in the domestic. And if you talk about the exports as well, a 12% sequential growth is what we've already seen. Would it be right to say that the export seems to be bottoming out and from here on, it's a gradual pickup that could be in store?
That's right, Hiral. The slide, if I may say so, started last year in May, June, when the dollar suddenly strengthened and the emerging market currencies started to devalue, and it has been non-stop. Like Q2 was worse than Q1 and Q3 was worse than Q2 and so on and so forth. And in Q1, after almost about 10 months, we have seen each of the months being slightly better than quarter four. And so I tend to look at retail level rather than shipments. So at the industry, in those markets where we are, the emerging markets mostly, there the retail level growth of the industry has been about 2% over Q4, what the retails were in Q4. So sequential growth of 2%. And our retail growth has been about 5%. If I also take the top 15 markets that we have, which account for almost 80% of our sales, the large markets, then the retail growth over there in Q1 has been 5%. And we have been at about 7% retail growth. But because we had managed our stocks down to avoid exposure for our partners, the shipments have grown at 12%, because if the demand now starts to pick up, then the supplies will have to move. Now, having said all this, the only point which I would like to say is that when you dive deeper, the recovery has been led largely by Africa, and that's because the fall was also greatest in Africa. Latin America is almost steady between Q4 and Q1. And South Asia, Middle East, which is like Bangladesh, Nepal, Egypt, and these places are still struggling. They are still below Q4 in Q1. And there was a temporary dislocation in ASEAN, largely because of Philippines. Some government registration process is still getting sort of established. And that had resulted in very poor retail. But I think that's a very procedural thing which should get corrected. So that's why when I put all this together, I would say the outlook is one of improvement. But I would not say that from now on we can expect a vertical takeoff. We would still say that quarter two should be slightly better than quarter one. And then we will see how it goes from there.
Absolutely. And it's always said in economics that a hockey stick growth is always something which is not sustainable, right? So a gradual is always something which is sustainable. Talking about the African market, Rakesh, Nigeria, we did see a 40% sequential growth in volumes. However, from an inflation perspective, fuel cost perspective, how is the sentiment according to you? Because that is one of the key markets.
Indeed. In Nigeria, what has happened is there are 2-3 things which have happened, which have not allowed the market to settle. The retails have started to improve, but there is still volatility in that market. Number one, on the foreign exchange side, the government has come out with some very good measures which are going to make the whole forex market more organized and more transparent. But it is a big change. So Naira has the parallel market rate and the bank rates, they have now finally started to converge. And of course, the Naira has devalued in that process, making the retail pricing go up. Secondly, there was an unsustainable fuel subsidy which the government was giving, and the government has taken off that fuel subsidy, which has led to an increase in fuel prices, and because of which there is an almost 25% inflation in the country. And therefore, the rider incomes have got sort of squeezed. Over a period of time, what will happen is that the ticket prices will go up because 95% of the usage is like a taxi. Some kind of a stability. These measures are very good from a long-term point of view. It is a short-term pain. And we are hopeful that they will lead to a more sustainable revival in Nigeria. So actually, we are quite happy that these changes have been undertaken. We have to sort of, go through the short term in the next 2-3 months, and then we'll see how it settles down. But hopefully, it will settle down in 3 months or so.
Right. And overall, if you talk about the three-wheeler segment as well, the company has launched the e-three-wheeler in passenger as well as the cargo segment now. What's the scale-up plan looking like from here on? And vis-a-vis competition, how does it pan out?
Yeah, see, we actually were ready with the launch of our electric three-wheeler slightly earlier. But when we went and we talked to the customers, and you have to remember that we are at about 80% market share now. So we have got a very strong franchise. The drivers and fleet owners, they talk to us and they expect something from us. And there was a lot of dissatisfaction with the current electric offerings. And that's why we went back, we took note of that feedback. We went back to our drawing board and reconfigured the product. And we said that we are going to launch it in a phased manner, only in a couple of cities, so that all the use cases in the field we understand and correct for them if it is needed. We have now been, they've been in the field now for about 6 weeks, and we had thought that we will start our scale up from October onwards. But the reception is very good. The customers are really liking it. There have been some niggling issues which we are sorting out, but this gives us the confidence to advance our scale up plan. And we have already indicated to the supply side that we would like to start to go to more cities from September onwards itself. So we will, in a phased manner, be taking up, scaling up from September onwards. And we will attack those markets where ICE is not permitted. So there are a lot of those markets in the north and east, and they will open up an absolutely new geography for us.
And when you talk about the premium bike segment and exports together, we do see that there has been some bit of a market share loss there. What is the number looking like on the market share perspective? And number two, how is the product mix changing? Because that is something which has impacted the gross margins as well.
I'm not sure about what number and what you are comparing, but on the premium bikes, are you referring to premium bikes in exports or in domestic?
Overall in the premium bike segment.
No, we have not lost market share. We look at the top half of the segment, which is 125cc plus, is where we are really very focused on in terms of our most of our innovation is over there, and there we have gained 2 percentage points. So that has been a very good story, and the contribution of the top half in our domestic portfolio has gone from 60% to 70%. So 70% of our business is now coming from the sort of 125cc plus segment, which used to be about 60%. So as you can imagine, this has a positive impact on both the revenue and the EBITDA. In fact, in the export side, because of Latin America, we have had an outstanding quarter in the Pulsar and Dominar, which is what our flagship and premium brands are. They had an outstanding quarter, and we are now at 25%. If you see, of our contribution comes from Pulsar and Dominar, but if you see between quarter 1 and quarter 4, there has been substantial growth in Pulsar and Dominar in exports also. So I would say that actually our performance is far superior in the upper half of the industry, which is what has driven our market share, our growth, and our financial performance.
Okay. And overall, if you see from Triumph, which is Speed 400 and Scrambler, how are the bookings panning out, and what's the plan in terms of production, taking the bookings so far into consideration?
So, Hiral, the whole idea of landing a strong punch in the beginning itself was to land the message to everyone who is desirous of participating in this segment that a very new and a very substantial proposition is now there for the customer to choose on. And we wanted to make that point very strongly and very quickly. And that is what has been achieved. It was not really from a sales-driven point of view, but that mission is accomplished. As of this morning, I think we had 17,000 bookings. And our production plans remain what we had conceptualized them, because they cannot be flexed so quickly within the quarter. And we are hoping to get to a 5,000 units per month kind of a production in this quarter itself. Probably it'll happen in September, but the rates will start to happen in August itself at some point of time. And that's where it is. October onwards, exports will commence. So that is the time we'll be taking up production further.
Right. Very lastly, Rakesh, overall, a 10% growth is what we've seen in terms of volumes in the first quarter on an overall basis, right? Is that number that we will be able to maintain in the coming quarters, or do you still see, where do you see it averaging out?
See, there is no doubt that the industry is moving up now. And in domestic motorcycle industries, I would say 4 to 5% kind of a thing. There is a base effect to contend with also in quarter two, which is, whenever the festive is later in the year in November, then what happens is that the Q2, because of monsoons, etc., and a delayed festive build-up, is much lower than Q1. So, and in our case, what will happen is that this was the build-up phase also, because, in last year, quarter one, we had a chip shortage, and that got sort of resolved by July, and we had started to pump in stocks, which were severely depleted there. So there is a certain base effect. But I would say that despite the industry being lower in Q2, we are hoping to come in with a Q1 kind of performance.
Right. Rakesh, one last question I want to ask you, which I'm really intrigued about, is, when Triumph was launched, similar time Harley was launched, right? And the big hue and cry was, how big are these two brands going to come in as competition for a Royal Enfield? Because in that category, Royal Enfield had 90% market share. From the market surveys that the company would have done, from what you would have heard, what is the street saying? Because I'm sure, it's a fact that you can't get a Royal Enfield down from a 90% drastically, right? But obviously there will be some market share erosion that will happen for a Royal Enfield, taking into consideration what's taken away from by a Triumph or a Harley. What is the consumer mindset, over these three?
See, obviously it is our proposition in the Triumph 400, right? From the time of conceptualization of the product and the strategy, is to aim at the heart of this segment. This was a segment which we were not participating in. This is the middle displacement segment. This is a segment where the customer is fond of sort of easy riding, not a edge of the seat performance like we deliver in the Duke 390s or the RC 390s. This is a segment which is people want classic and heritage kind of bikes. So form and styling, and that sort of all these things came together very, very nicely in the Triumph brand and the Triumph lineage. So obviously, our strategy right from day one is to aim at the heart of the segment, and and I think the product, what we are picking up from the various auto journalists who have ridden the product, and almost 200, 250 experts have done day-long rides. And when we are doing our debriefing with them, I think they're saying that what your conceptualization was, to aim at the center of this segment, you're getting it right with this product. Now, it's also a matter of expansion of the network, and we are doing that again in a calibrated manner. We can put these bikes in our Bajaj showrooms, but our objective is to give a very differentiated customer experience. That experience has to be a Triumph experience, not a Bajaj experience. It has to be a Triumph. There are two distinct experiences, and we want to stay authentic to the brand. So let's see how the customer receives it. But our intent is absolutely to aim at the bullseye, at the center of this segment, and perform there.
Absolutely. And I think, in the segment we're talking about, brand loyalty is something which is absolutely key. So bang on in terms of that brand differentiation that the company is thinking about as well. Thank you, Rakesh, so much for joining us on the show. It's always a pleasure to have this candid conversation with you. Thank you. Stay safe and speak to you soon again.